Hi, Major FX here. Welcome back to our channel. In today's video, we are going to talk about forex market structure according to Elliott waves analysis combined with trendline and Fibonacci. This is a complete strategy on its own, which can be used by both traders and advanced traders. In this video tutorial, you'll understand the full movement of a complete market trend from the beginning to the end. This will help in eliminating confusion during analysis, thereby boosting your confidence and ability to produce high probability trades with confirmed entry and exit level and proper risk management. We'll start by identifying common market structure, which is made up of impulse and correction waves. This impulse and correction wave from the market trend uh, are either bullish or bearish. The trend structure is normally made up of five waves, which are going to learn today. When I talk about five waves, these are the waves: the impulse, two, three, four, five. You can understand that this is the impulse correction, impulse correction, impulse correction. After the fifth wave, you find the ABC correction. So you get the ABC correction. All right. I think that is clear. And as you can see, I've already plotted the sketch of the market structure that we are going to use later. We'll jump to the charts and analyze the strategy. So we already have the impulse correction and the market move and the way the structure of the market is. We identify the trend by five waves, which are the impulse correction, and then an impulse, which completes at five. And after five, we see a correction, an ABC correction, which this is impulse correction and then the impulse, and then a continuation of the trend. So we are going to confirm this whole trend with the Fibonacci retracement levels and with a trend line. First, we're going to start with trend lines, and I'm going to pick my trend line tool. All right, there is a trend line. I'm going to place the five waves into a channel by cloning this trend line and placing it on the swing highs. Right, so you can see that the market is moving in a channel, and the channel is, is the formation of the trend. So after the channel is broken, we see the correction, and the correction forms out of the channel. But this can be a little bit different in the charts, where the market is not as accurate as how I'm explaining here. I will show you, and that's where you'll understand why I love to use this strategy. Okay, so we're going to also to confirm this by Fibonacci levels. Immediately after the beginning and the first wave, we create the second wave. The second wave is formed at 0.618 of the first wave. So we expect the market to bounce at 0.618. We'll stretch this to finding the support at the third wave, and the third wave forms at 0.382% of the Fibonacci. Okay, so you realize that we have 61 or 0.618 and 0.382. That is where now you can start looking for buy signals from that level. That is the strongest support level where most of the market moves and bounce from. And from there, with that said, we're going to see what we're going to trade during these market movements. And our first trade should be here at 0.018. Immediately you get a breakout of this. I will show you in the markets, in the live market charts, so that you can understand well. And the stop loss should be just below that. We'll target the entries using the Fibonacci expansion tools and extensions. So our second trade should be here, trading the fifth wave. because we are trying to trade according to the trend. The way we already know that we are in a bullish trade, so we don't want to counter trade. We won't trade the second, which is a correction wave, and the fourth wave, because those are correction wave, and we don't want to counter trend. And so again, we're going to trade the ABC correction. So we're going to short the ABC correction from B to C, right? The last trade that we're going to make from this trend is the continuation of the trend, which is the C to D correction. This so I'm going to pick my this is where how now we're going to trade it. So we've already confirmed the second and the fourth support areas using the Fibonacci. We are going to confirm C with the Fibonacci. Okay, now we're going to plot the Fibonacci from 0 to 5, and normally we see that the price is bouncing all the way from 0 to 0.5 Fibonacci or 0.618 Fibonacci, and that's where you start looking for your buy signals. So from this level, we are going to move to the charts where I can understand where I can show you how we trade it on the live charts. So let me adjust these charts. With that idea, we are going to trade the USD card for our time frame. From the beginning, we'll plot the waves that we already seen, and this is 0, 1, 2, 3, 4, 5. So that is the complete of the first trend and we are going to plot the correction. Very nice. So from the correction, we're going to use the trend line just the same way we used here, and this is where now you're going to realize that most traders find false breakouts, because from here, if I plot it at 2, you realize that the market falls out at 4. It comes out of the trend line, and if you are trading using the trend line alone, you're going to make a mess, because you're going to see different things here. You're going to think that the market has broken out, and you're going to sell here when it retests, and that is where you don't understand that the market is just made a false breakout. So when you're using trend line alone without the knowledge of the market structure, you're going to fall into these movements that are out of the trend and gives you false impression of the market breakout. So with the knowledge of the market structure, that the market moves in 5 waves, you are going to understand that we are still waiting for the fifth wave, and so you are not going to enter any sell from this level because you have not yet seen the fifth wave. So we'll remove this trend line because I don't want it to confuse you into believing that the market has made a breakout. So but some trades work with the trend line very well, but some will give you false breakouts, and that's why I bring up this idea of using the market structure, understanding the market structure, so that you don't fall into these traps of false breakouts. So if you want to enter a trade, you're going to use the trend line just from the beginning to the swing, and any breakout from this level, we adjust this chart. If you get a breakout here, minute right there, okay, so this is how you're going to trade. Breakout, you buy, and the way targeting, you're going to use the Fibonacci extension level. If you don't have the Fibonacci extension level, please try to add them into your Fibonacci tool so that you can understand how to target your trades using the Fibonacci extension levels. Already we can see that the market bounced at around 0.5 here. So we are going to target our trade at around 0.06 extension level. This is where we're going to take our trade, because you see that already the market has shown us that it bounced from 0.5 around that area. So our target should be at around 0.06, 0.618. Again, when we move to the next trade, because we are not trading the, uh, the sell, the correction moves, we're going to move it like this. Okay, should be here. Immediately we get that. To confirm the exit, we're going to use again the Fibonacci all the way from the beginning of the trend to the third wave. So I'll plot. Okay, let me just do this first. Let me remove one of this so that we can have a clear chart. Yeah, plot it all the way from that place to 3, right? We see that it bounced at around 0.38 and around 0.5, and this is a good risk reward ratio, as you can see from where we took our trade to where we are going to place our stop loss, just below this market swing low. The same thing is going to happen here. We're going just to place it here. A good risk reward ratio, because we understand that this is the end of the market of the fourth wave, and now we're going for the fifth wave. And allow me to target it like this now. Very nice. So that is the first wave. Another thing that we are going to treat is the ABC correction. Immediately you notice the market has moved break, break the breakout, we sell. The target of 0.618, we're going to use again Fibonacci, but this time we're going to use Fibonacci from this level to the retracement level of 0.618 or 0.5. Anywhere to this level or this level, you can just take your profit. Okay, another place that we said we're going to trade is the C to D wave. So long, going long. Again, we're going to trend line, add a trend line here. So immediately we get a breakout of this level, we buy. Okay, all the way to B or 5. Markets just below the market structure, we place it there, and so you realize that you can easily predict what the market is going to do and how the market is going to move using market structure analysis, and there are confirmations, so that you're getting your entry level, you're getting your exit levels, you're getting the movements of the market in every direction that the market is moving. Because some people, while selling from B to C, they won't realize that C bounces at 0.618. They will just try to sell it all the way here, and before they realize, the market has already gone back to the beginning. And so, with understanding that the market moves, in a summary, I can say that the market moves in 5 waves and a ABC correction. So, anytime you enter the market, you want to realize your position in the market. If you realize that you're coming from the bottom and you made your first wave, got your trend line, wait for the breakout, and you continue to buy, another trend line, wait for the breakout, you continue to buy it. After 5, you realize that now we should be looking for a sell. And from there, you wait for the ABC correction, and you sell from B to C and buy from C to D. So that is what we talk about the trend analysis and what uh, you're going to see in the trends market structure. Thank you for watching the video. Don't forget to check out our other trending strategy on our channel and subscribe so that you don't miss any videos. If you would like to join our trading channel on Telegram, you'll find the link in the description below.